All right, hi everyone. Welcome to today's webinar provided by Solarplaza and held in preparation for our upcoming Unlocking Solar Capital Africa conference, which will be held on the 1st and the 2nd of November in Nairobi. My name is Eveline Jansen. I'm project manager at Solarplaza and I will be the moderator of today's session. So today's webinar will focus on the developments and trends in the solar PV off-grid and distributed energy sector in Africa. Off-grid will be a large focus in our upcoming two-day conference, where we have 2 out of the 3 tracks dedicated to off-grid and distributed energy. The focus will be on unlocking capital for new solar project development in Africa. And we expect to welcome around over 300 international stakeholders ranging from financiers to project developers, IPPs and EPCs and more. There will be excellent networking opportunities such as a dedicated business and financing matchmaking session, which is supported by RECP and Solar Power Europe. And here tailored meetings are organized by a professional matchmaking agency. As well as we additionally have an online meeting planner, so there's plenty of opportunities to network. We are partnering with GOGLA, the Global Off-Grid Lighting Association, for this conference, and they have put together an excellent program for the off-grid track and even additional side events. I'm briefly showing you here some of the highlights of the program. But at the end of the seminar, there will be some additional explanation from GOGLA's side on their activities during and surrounding the conference. Now, briefly about ourselves, Solarplaza is an international information and business development platform focused on the global solar PV market. We've been around since 2004 and have by now organized over 80 events in both established and emerging solar PV markets. Now, quickly moving on to the actual webinar, I would like to point out some practical things first. If you have any questions or issues also during the webinar, you can communicate with us by typing in the control panel on the right-hand side where it says questions. And questions directed at our presenters will be collected. We will aim to get everything answered in our Q&A session at the end. If you have a question for a specific presenter, please indicate their name while writing your question so we can address it accordingly. And yes, you will also receive the slides and the recording automatically after the webinar has ended. So for the agenda for today, we will have 4 speakers from Bloomberg New Energy Finance, from the Global Off-Grid Lighting Association, from PowerGen Renewable Energy, and from Luminar. We will have a Q&A at the end. We'll make sure we have plenty of time for that, and that will be the end of the webinar. Now, I will very briefly introduce our 4 speakers of today, who will share with us both the analysis and data side on the off-grid market, as well as the boots on the ground experience and all expert opinions on what they see happening in the market. Itamar Orlandi is the head of applied research at Bloomberg New Energy Finance, and he leads the off-grid and grid reliability research team. Recent work from them include the market outlooks for solar energy, strategic analysis for major energy companies, and also an assessment of business models in the off-grid solar markets. Laura is a program advisor for GOGLA's Facilitating Access to Finance program, which helps increase investments in the sector to scale up and accelerate the development of the off-grid market. Sam, who is the CEO of PowerGen Renewable Energy, that's one of the bigger companies in mini-grids, so they have installed several hundred systems throughout at least 7 East African countries, including 40 microgrids over the past 5 years. And then Eliza Hogan will be our final speaker, who is CEO at Luminar, a tech startup providing innovative pay-as-you-go solutions for financing and also rent-to-own models for renewable energy products in emerging markets such as Africa. Now, without further delay, I will give the floor to Itamar. Itamar, you can take the presentation, please.
Perfect. Thank you very much, Evelyn, for the kind introduction, and hello, everyone. I'd like to start with the first slide, and I think it's important to just remind ourselves of what we're talking about here. There's about 1.2 billion people globally not connected to the grid. Primarily they're in Asia and in Africa, and I think the most important part about this slide is to look at the time series, where we can see that in Asia the number is actually coming down, but in Africa in particular, we're not even going in the right direction. So the number of people living off the grid is actually increasing. The difference is, of course, primarily sort of macroeconomic drivers. Now, essentially we can think of three different models in which these people can now be reached. The challenge is primarily is not technical, of course. So we have these three options that we have. Is on the one hand, we can do it via grid extensions, mini grids, or standalone systems. Now, neither of them is perfect. They all come with their pros and cons. The grid, famously, is usually the cheapest on a kilowatt-hour basis. And it achieves that because it can leverage huge economies of scale, but as a result, it can be quite slow and has long development cycles. On the other hand, sort of at the extreme, we put a picture of a solar home system, but it can really be anything that consists of modular technologies, where often really it's an appliance that comes with its own power source. You can think of a solar home system, or it can be also things like solar-powered irrigation or something like that, where the benefit is really that it can be almost immediately applied because there's really only one purchasing entity. So instead of thinking of the trade-offs in terms of costs, we can almost think of them across two axes. One can provide on-demand power, really this experience that we know of being able to plug in whatever you need and fully power that. On the other axis is on-demand access, so the ability to get that as an end consumer whenever you want, without being independent of additional decision makers or dependent on as little as possible additional decision makers. And crucially, that type of, so something with only one decision maker then is not just more easy to apply, but is also highly responsive to infrastructure gaps. So I'm going to focus primarily on the last end, on standalone systems, and then talk a bit about mini grids later on today. First of all, I think it's worthwhile looking at who the people are buying these in the case of simple solar lanterns or solar home systems. And I think one of the things that strikes me looking at some survey data that we have, in this case from Rwanda, is that this is really quite a heterogeneous market. So it's not just kerosene or it's not the same technology that is being displaced. Actually, we can see that in Rwanda, at least, out of people who later on bought the solar home system, the majority or the single largest group used battery-powered torches, and they pay between sort of 3.6 and a little over $4 for that a month. And that's quite an impressive number, because actually the solar home system that they bought later on costs about $6.50 on a monthly basis. So that the primary incentive here is really not necessarily even savings, but it's actually an upsell towards a more expensive but probably higher quality product. So these people are really looking to get higher quality lighting. And when you ask them, the prime consideration that they think of originally when they buy the system is really to get better lighting. There's a very interesting nuance to that as well. If you look at the left-hand chart, that actually when you ask people once they bought the system why they're using it, or what their most favorite functionality of the system are, the number of people who mention the phone charging capability as part of that goes up quite significantly. So we've seen about 14% retroactively saying that really what they primarily use it for is the phone charging capability, which I thought was quite interesting. Now, at least in the case of Rwanda as well, what strikes me is that really people hear about this technology the first time through a sales agent. That makes distribution incredibly expensive, because really that's the primary differentiation that companies have is an army of salespeople knocking on doors and convincing consumers not just to buy their kit, but to buy some solar kit in general, and really to buy this upsale. And that is quite an interesting number, because Rwanda is a relatively new market for this, and what we've seen in other markets is that as soon as penetrations reach a higher level, where more and more people get exposed to the technology through friends and neighbors, we see that the importance of these sales armies decline, and we see people switch to other providers. And really looking at the sales numbers that Google and the IFC have collected over the past few years, that was really the dip we've seen in early 2015. We think that was primarily driven by this competition from cheaper non-branded products that drove the sales dip. What we're seeing now in over the last year essentially is that sales have recovered and returned to grow at a considerable pace. It's also interesting, and I'm sure Laura will talk about this later on, is that the average unit price, or the average revenue per unit, is actually increasing. So revenue is increasing faster than unit sales, which again indicates that there's a push from the distributors to focus on larger systems where more revenue can be captured, and leave more of the lower end market to a more commodified competitors. And there's also another question that I think will come up in future iterations, and that is the question of replacement sales. So we have the average product lasts for about 2 to 3 years, and that was really when sales started ramping up in the past. So if you think that a lot of the people who bought their initial product in early 2013 are buying now again, and you deduct that from the sales that we're seeing now, or that we're going to see in the next few years, that sort of leads to an adjusted number of new consumers reached. So the question there will be, where are people going to replace their systems once they reach the end of their lifetime? Are they going to stick to the same providers, or are they going to go to other solutions, or are they even going to go back to non-solar products? Now, one group of companies for whom this question is a bit less relevant are, of course, the pay-as-you-go solar companies. Those are companies that sell products bundled with a consumer financing solution. You see a few of those companies, and you see also on the slide the amount of financing that they've raised. This is really the most successful subsector in the off-grid segment by far in terms of dollars raised. These companies just year to date have raised about $120 million, which puts them well on track to get to the same number that they've done last year, which was just under $160 million. And it's not necessarily the companies with the biggest consumer footprint that raise the most money. There's significant differences in the size of systems that companies sell. M-Kopa has reached the most clients but has a relatively small system, and Mobisol, on the other hand, sells bigger systems, therefore reaches higher revenues per user, and I suspect that is one of the things that have helped them recently reach quite a significant funding round with Investec, which was really which was the first round where no impact party was involved. This was a purely private equity driven investment round. And if you look at the fundraising, you'll note as well that actually the equity component is increasing this year. And you can see that really as an indication that a lot of this capital that's going into the sector is growth driven. So that is capital that is going to go into future extensions, not necessarily just into financing outstanding consumer loans that are already out there in the market. And you can see that, so that means that we'll probably see on the back of these equity raises at the moment, we'll see another round of debt capital coming in once this equity capital is being deployed and consumers grow and sales grow. And top of the agenda from that angle is, of course, companies will need to find ways to leverage more and more debt into their business models, because long-term they're not capable to grow, to run a consumer financing model purely based on equity or purely financed from equity. So the industry is currently undergoing a few changes to facilitate that. On the one hand, there are efforts to create harmonized metrics in terms of how portfolios can be measured and how risks within portfolios can be measured. You'll also notice that the companies, in terms of how they market themselves to investors, they talk more and more about projects rather than describing their business as a retail business model. Right now, they're focusing a lot more on selling a certain project, a certain number of future consumers or existing consumers that they will reach, and financing that part. And the mechanism that they're using, and this we've seen from a number of players already, is an SPV mechanism. So essentially they offload the consumer receivables into a special purpose vehicle. Consumers, of course, only face the operator, but the payment streams go directly into that SPV, and from the SPV back to the original investor. In the case of Bbox's first attempt to ever do this, this was Oiko Credit, but again, we're seeing similar structures being deployed in various other forms. If you want to know more about this, you'll see a link to a white paper that we published recently on this issue. And what the white paper really does is it goes into a lot more detail on the different risk components of such a structure and how they can or could be mitigated. Because what is notable is, of course, a lot of risks, particularly around who the consumers are, and of course as well that the financial or the foreign exchange and the regulatory risks are a lot more pronounced than in perhaps similar consumer financing asset-backed securities that you see in the States primarily. So there's a lot of nuances and a lot of ways in which some of these risks can be mitigated. But when doing that, I think it's important to memorize that the innovation in the pay-as-you-go business model was really around shifting that credit enforcement mechanism away from a legal one, which we have in developed markets, which is FICO scores and the whole credit enforcement system that stands behind that, into something that is really technology and economics driven. So the main logic is that you can remotely deactivate the consumer system and thereby incentivize the consumer to pay, and you also hope that he's incentivized to pay purely because all the alternatives are more expensive. Now that logic can break apart as soon as you have competition out there, and there's precedent for this. If we look at the ITCOL program in Bangladesh, which was for a long time, it was one of the programs that pioneered the approach of bundling solar home systems with consumer financing, and it has reached over 4 million households in Bangladesh over the course of several years, starting in about 2006. But what we're seeing over the last 1-2 years is that sales had stagnated originally and then really come down, and that is partly explained. You can see that in the data, but we understand that really the main driver of this is not market saturation, but really a lack of competitiveness of these offerings. So as soon as alternatives came into the market that were cheaper, people actually found the ability and the will to then go for these alternatives. So as a result, what we're seeing is more and more of the pay-as-you-go companies becoming aware of that, and the trend trying to opt for shorter payback, consumer payback periods, because really that leaves the money at stake for a shorter period of time in which you can be more comfortable that you have fewer surprises, let's say, in terms of new competitors coming to market. So that's the solar home system segment. A few words on the mini-grid segment as well, or the microgrid segment. Really, that segment overall is far less developed. There's been far less traction from an investor point of view. And the primary reason for that is that whereas for pay-as-you-go solar, there's sort of a blueprint almost already for what the business model looks like. In microgrids, there's still huge variation in how they are done, not least because the increased complexity, both from a technological point of view, but primarily from a project management point of view. So we can really look at the different business models in a variety of options, or across these two axes that I put on the chart here. You can get mini-grids that provide really grid equivalent power, so the same experience of being able to plug in any regular appliance and power that, primarily AC appliances as well, but also mini-grids that provide partial power, be that either only DC power or be that often in the case of purely diesel-powered mini-grids, that may be power that just runs for several hours during the day. So the bottom two have obvious shortcomings in terms of the quality of power that they provide. So let's focus on the top two, on the grid equivalent business models. And there we really have two models. We have some companies that go bottom up, really start on a merchant basis to go into certain locations, identify locations, and build out mini-grids there, enroll their own customers, and do a lot of very downstream stuff in terms of really managing consumers and building that out. Some of the companies to mention there are PowerHive, PowerGen, who we'll hear later, and as well Husk Power. The alternative business model is a more top-down business model, and there I think it's noteworthy. We see primarily storage providers coming in there and playing relatively leading roles. So companies like Electropower Systems or Fluidic Energy, which have projects on a relatively large scale to electrify regions, and they work with local utilities, occasionally even sort of micro-local utilities, to do that. Kenya Power is another example, which recently raised or received money to retrofit existing diesel grids with renewables. Now, the pros and cons of these business models are similar to what we originally said. On the left-hand side, the top-down approach requires relatively longer lead times because you really need to engage with a lot of the other parties and need to get a few players aligned to do that, and you need to have strong players there. The top-down, the bottom-up business model is still harder to do, and as I mentioned, so far has received less traction. There are, however, a few things that all microgrid business models have in common. One of them is that increasingly PV is just becoming the primary driver. What you're seeing is data from India, but I think that's globally something we're seeing, is that most players will focus primarily on solar, purely because this is more scalable in that it can be applied everywhere and doesn't require very location-specific engineering. Of course, there's a need for remote monitoring, and really the primary question, and this is probably what holds back a lot of the investment, is this question of what is happening, how will this integrate with the grid if and when it arrives. Those are the key topics here. So with that in mind, I want to wrap up, and I think there are really three takeaways from this vast sweep of what's going on in off-grid energy that it's worth taking away. The first is really actually what we're seeing is consumers are willing and often able to pay premium tariffs. So it's not just about savings, and you can see from the bottom up actually how quickly in some cases both consumption can increase and the usage patterns can change quite rapidly once people have access to modern electricity. The second thing that I think it's noteworthy to take away is really the threat of commodification we're seeing in these markets. Generally, the simpler the technology, the easier it can be copied, or the harder it is to differentiate yourself in these markets. And that is not just on the low end portable lanterns, but I think that is something that can also happen to solar home systems and can sort of happen to larger systems as well. And one of the best ways to protect revenues and from such commodification is, of course, in the distribution relationships. So really the ability to gain access to these consumers, protect that access, but then use these same channels to stay in touch with consumers and be aware of where they're going to buy their updates, where they're going to replace their kit, and what are the other things that they can now spend money on. Those are, in my view, some of the top three takeaways. And with that, Evelyn, I'll hand back over to you, or to Laura.
Perfect, Itamar. Thank you so much for the very extensive overview. We will just go straight away to Laura. Laura, the floor is yours.
Great, thank you, Evelyn. I'll get right to it since I know we're slightly short of time. Evelyn, can you change the slides for me? Actually, I can't seem to click. Okay.
Absolutely.
So firstly, briefly about Gogla. We are an independent not-for-profit association representing over 75 members. Now we're actually closer to 80, who are active in the off-grid solar lighting and electrification industry. And we support the whole sector as well as our members through 3 different work streams, one on investment, one on the enabling environment, and one on quality assurance and consumer protection. And as part of this mobilizing investment work stream, we are working closely with Solarplaza on the upcoming conference. Next slide. So we have, as of May, 76 members, 20 new members joined since last year. Now we're at 80. All of these are signs of a growing and dynamic industry. In addition to manufacturers and distributors, we also have a selection of associate members who are investors or other stakeholders in the sector. So then I'll dive a little bit deeper into our semi-annual sales and impact data report, which Itamar alluded to and we just released last week. And the full report is available on our website at gogla.org, but I want to present some highlights particularly pertaining to the sub-Saharan African market that came out in this report. So this is a report that we do every 6 months together with IFC's Lighting Global team, and the respondents are Gogla members and or IFC associates. And last round we had about 50, or exactly 50 companies participating, which is the most yet. And if you want to get more information about becoming a Gogla member or being part of this data collection, then please do get in touch with us at Gogla. This is also linked to the larger Bloomberg New Energy Finance Off-Grid Solar Market Trends Report, which Itamar also spoke about earlier. Next slide. So we see in this past half year, January to June, we had a slight increase in the reported volume of products sold from 4.1 million to 4.3 million. However, if we look at the revenues on the next slide, we see that actually the revenues increased by over 18%. And this is a result of having a shift to higher valued products. And we should also note that pay-as-you-go company revenues are actually not included in this 139 million because we had incomplete data in that segment, so we didn't include it at all. Probably if we are able to include the pay-as-you-go revenues in the future, we'll see an even more pronounced trend towards revenues increasing faster than volumes, because the pay-as-you-go products tend to be in the higher price categories. Looking at this report beyond the numbers, as I said, this is an evolving and dynamic market, and there's multiple things that influence outcomes, partly within the companies themselves, but also there's a lot of external factors, including policy change, availability of finance, and particularly working capital. Actions by development finance institutions still very much shape the market. Macroeconomic factors, especially exchange rate fluctuations, because many of the main players in this sector they have their receivables in local currency, but their own funding is in foreign currency and their own invoices are in foreign currency. So local currency depreciation has really pronounced impacts. We also see some seasonal trends which vary somewhat country to country, but there are some commonalities in terms of the second half of the year typically having stronger sales than the first half of the year. And then there's also the issue of competitive dynamics, which Itamar also spoke about. The challenge posed by copycat and counterfeit products is quite real in a lot of the markets that our members are in. Next slide. We'll go quickly through these slides. These show the historical and cumulative product sales. So here we see the same slide as what Itamar showed earlier, showing a slight increase in this half year and the recovery in 2015. Next slide. Here we see historical product sales by region, and this really shows sort of the key outcome for this particular report, which was the slight decrease in sub-Saharan Africa. So it's about a 12% decrease in reported volumes, and we'll go into a little bit more detail on some of the factors that explain that. Here you see the cumulative product sales since reporting started by Lighting Global in 2010. So you do see a significant increase throughout the years. We have now about 23.5 cumulative sales. Okay, here we're looking a little bit more closely at the product categories. So while there has been a shift, and we'll look at that a little bit later, into larger products, the small entry-level 0 to 1.5 watt peak products are still the most widely reported sales in terms of volume. Revenues are more significantly generated in the higher categories. Next. So then looking at sub-Saharan Africa, this is really a key market for our members. So about almost half of the reported product sales come from sub-Saharan Africa, with South Asia, primarily India, accounting for about 40%. Within that sub-Saharan African sales, East Africa is still leading with about 70% of the total reported sales volumes and 77% of the revenues generated in East Africa. Next. Now, as I mentioned, there was a decrease in the reported sales in sub-Saharan Africa in this half year, and there are a variety of reasons for that. Some that came up in the discussions that we had with companies, as well as in the data that they reported, is that a lot of this decline happened in Tanzania and Ethiopia. And there are specific reasons, for example, for Ethiopia's situation, where a change in national quality standards led to products being held on entry to the country, and this resulted in shipments being diverted. Lack of working capital was also a major issue, and linked to that, this issue of counterfeits, which come in to fill a void that's left when branded products are not being sold because of constraints in working capital. At the same time, though, we do see also increases in specific countries like Rwanda and Benin because of positive government and DFI initiatives. Next. So here, if we look by category between West Africa and East Africa makes up the majority. In East Africa, the 3 to 10 watt peak sales make up the vast majority of revenues. Still, though, the small products are very important in these markets, and there is still a strong demand for smaller products. Next. That being said, the 3 to 10 watt peak multi-light solar systems have really increased in popularity. We see here a salesperson from Mcopa Solar, which is a pay-as-you-go company operating in that segment. And the single light products of 0 to 3 watt peaks have decreased slightly. Still, they're the biggest single category in terms of volume, but they have decreased somewhat. Next. Also growing is the 21 watt peak to 100 watt peak solar home systems. There is also, we have to say that there's a lot of 100 plus watt peak systems that are not reported by our members who still mainly focus in solar home systems up to 100 watts. But at the same time, we do see this growth. And we see in this table a lot of what I've been saying before. Biggest category is still the entry level. Biggest revenues come from the middle categories. Next. So I want to invite you all to stay in touch. Hopefully I'll see many of you in Nairobi, and I'll talk a little bit more at the end about the off-grid side events and other off-grid programming. Thanks. Back to you, Evelyn.
All right. Thanks, Laura, for a very detailed overview as well. Sam, I would like to invite you to take the floor.
Great, thanks so much, Evelyn. Thanks, Laura, and Itamar as well. Evelyn, I don't know, I do have control, never mind. So I represent PowerGen Renewable Energy. We are, as Evelyn eloquently pointed out, a microgrid developer based in East Africa. We've installed a few hundred systems in the region over the last 5 years. We have 60 full-time employees in Kenya and Tanzania. And over the last few years, we've used our installation platform in the region to start building microgrids for ourselves and for partners, and have built about 40 to date, mostly in Kenya and Tanzania. I'd like to take a slightly different approach here and not discuss our business or even microgrids too specifically, but instead focus on 3 big ideas that we think are really important to keep in mind as we all go about trying to solve these problems of energy access and renewable energy in Africa. The first point will be distributed energy is not the same as discrete energy. The second, global power system architecture convergence is critical, and that the on-grid and off-grid worlds need to talk more. The first point, distributed energy, which to us means embedded energy generation and storage embedded throughout a network, is undeniably a good thing. It's where the world and our power systems seem to be heading. But importantly, it's not the same thing as discrete energy, which is energy sources operating autonomously. And the reason this is important is mostly as it relates to our perspective on grids. Grids are essentially the biggest and cheapest batteries we have available to us. They should not be seen as a vestigial structure that's supporting an old fossil fuel and centralized generation system. They instead should be looked at as a generation agnostic aggregation tool. Many other sectors in our lives are benefiting from network effects of aggregation, and power is no different in many ways. Those are the qualitative arguments for grids, and quantitatively, if you look at the numbers, it's just objectively extremely expensive to cut the proverbial cord to your utility company, and sometimes the rhetoric around this trend has exceeded the reality and the cost implications of that reality. As you can see there in the bottom right, in India it would cost over $3,000 consuming only 2.5 kilowatt hours a day to install batteries to support your home. The grid is a much cheaper option in that sense. But the argument can be made that that the world is changing, and with efficiency gains, the future household globally won't need so much power. And this is a very viable argument. We're already seeing really impressive advances from many of the companies that have been mentioned. I think Mobisol in particular has done really impressive things, driving larger appliances for consumer use. And it's really a good and positive trend, and it's happening in developed markets as well. That being said, there's still a huge gap between the amount of energy the average solar home system delivers and what most of the grid-connected world consumes. Will that gap be closed by energy-efficient appliances? In some part, yes, but we would be very skeptical that it would close completely. On the other side, you have reducing costs of PV and storage. These are really positive trends. And really the one to look at is storage. Assuming that PV kilowatt-hour generation gets to true grid parity, which it's not yet, your question is really, what's cheaper, installing a battery in someone's home or installing a grid connection to connect them to the infinite battery that is the grid? And the reality is it's still really expensive to install a meaningful amount of storage in someone's home. To make that leap from the average solar home system level to 2.5 kilowatt-hour a day connected Indian household is over $1,500, and that's a significant amount of money. And for that money, one could be connected to a grid in many, many areas. Now, these are current costs, and there's some assumptions there at the bottom that you can look at. But even assuming that storage costs drive down into the $100 or $150 per kilowatt-hour range, the cost benefit against grid connection is still pretty challenging for autonomy. So to summarize this section, distributed energy is not equal to discrete energy. Grids are big, cheap batteries. Let's reframe the way we think about them, not as dinosaurs as part of an old system, but instead as the networking tools that they are. Second idea is convergence. The future grid, the consensus in the future grid seems to be that we're moving towards a world where a grid serves as a multi-directional mesh network that sits in between generation, storage, and consumption nodes. This is the vision being propagated in Europe and the US by companies like SolarCity, Tesla, and others. So if you look in the bottom right of this slide is really the important pieces of that. We'll have smart metering, we'll have interconnectivity with the main grid, distributed storage and distributed generation, and importantly that those arrows start to become bidirectional. Consumers will be able to both generate and consume energy, and those flows will be managed by the utility. It's really important as this transition happens globally that Africa focuses on making sure that we hit that future state. We want to be very careful not to be building grids and power systems in Africa that are in the model of a 1980s grid in the US or Europe. But we also want to be careful not to think that we're going to build a totally parallel system here in Africa where autonomy is the only thing that we're advancing. And I think a useful case study for this is the often used telecom example with a different spin on it, perhaps. What was so powerful about the telecom rise in the 90s was that the systems were built in the same, with the same architecture as Western systems. And what this has meant as progress has been made with GSM, we've gone from 3G to 4G and beyond, those systems and those advancements can flow to Africa seamlessly. And Africa is ahead of or on pace with at all times technological advances for telecoms. If we create a totally parallel system here, we won't be able to benefit from those global advancements, and that's a dangerous thing. And how are we doing creating such a future? I think in general, the off-grid solar industry is doing a pretty good job. We're understanding ideas around smart metering. We're understanding ideas around distributed storage and distributed generation. I think where we're really not there yet is understanding how do our systems and how do our initiatives fit into this integrated grid system of the future, which, as discussed in the first section, is pretty important if we want to drive meaningful amounts of consumption. So at the end of the day, we need to focus on Africa leading the way to a new global future for power, but not necessarily an Africa-specific one, which can create some dangerous long-term effects. Finally, the on and off-grid markets worlds need to speak more. I think actually that the framing of on-grid versus off-grid is a dangerous one in some ways. At the end of the day, we're trying to solve two problems. One is energy access, and the two is increased renewable energy usage. Framing it as on-grid versus off-grid makes us miss some things. For instance, the off-grid world has a lot to teach the on-grid world about value-reflective tariffs. As Itamar mentioned, people are willing to pay a premium. The average solar home system pay-as-you-go user is paying $5 per kilowatt hour. A utility operator would look at that and be horrified, but it's value reflective and it's what it's worth to people, and that's really important. The off-grid realizes that service is what matters more than commoditized electrons. They understand that you can start with power, but once you build that relationship, there's much you can do with that customer relationship, and understand the power of prepayment and smart metering and the data that comes with it. But on the other hand, the operators of grids and utilities have some things that I think that the off-grid world can learn from them around building long-term assets, building assets that are going to support productive loads and economic growth, and understanding really that grids are the best possible way to encourage more renewables. Back to that idea of it being the big battery, the only reason that renewables have taken off in developed countries is because they have the benefit of feeding into a big grid. Without a big grid to feed into that's robust and well managed, it's really, really hard to scale megawatt scale renewables, and ultimately we're not going to make a good dent in this renewable energy, this climate change problem without that. And Kenya is actually a great example of this. It's not going to happen on its own, and Kenya's just curtailed a bunch of solar projects in favor of a big coal-fired power plant, and that trend will continue if we're not more cognizant of the challenge. And finally, a suggestion for how maybe to think about this as an alternative to the on-grid versus off-grid. Really, we see it as the energy access versus renewable energy, and various parties fall in various places here in the solution. Solar home systems are in the far top right, focus on renewable energy and totally autonomous. Conservative utility companies are in the bottom left, but they're starting to drift farther to the top right. We don't think the future is purely renewable. I think it's a very difficult future to imagine. There will be a need for base loads that don't come from intermittent supply. And we also believe that the future will involve grids. Will they involve the old model of fully centralized grids? No, they will be distributed energy, but it's going to be somewhere there in the middle. And that's what I think that all of us in this sector should be really focused on trying to drive towards. And that's it. Thanks so much.
All right, thanks, Sam. Really interesting, kind of like taking a step back and yeah, kind of looking at an alternative overview. All right, then for the last presentation, I would like to give the floor to Eliza from Luminar.
Thank you so much, Evelyn. My name is Eliza Hogan, and I work at a company called Luminar, and we do pay-as-you-go technology. And I did have we do pay-as-you-go technology that can integrate into all sorts of different solar home systems, solar water pumps, so that manufacturers can put their products into the market and be able to allow their distributors to have payment plans for their end consumers. So we partner with a number of different partners in the microsolar field, such as Facera and Omnivoltaic, and we have about 9 manufacturers, including solar water pump manufacturers. So I just wanted to talk a bit about the challenges that we're seeing in Africa and powering households and through solar energy and typically off-grid products, as well as providing products and support for smallholder farmers to make sure that they get the tools that they need to move more towards productive use and move more towards having a farming facility that is more powered by solar energy, but also creating an environment that is more enabling and more financially inclusive in the off-grid market. So I just want to talk quickly about, there's about 200 million households that can't afford solar power energy just because of the upfront cost. A lot of these are smallholder farmers that don't have access to power or energy to use to grow their farm. They're generally just using hand tools. A lot of them don't have access to credit simply because their crops may be sporadic. They may be are challenged to find the right kind of financing partners for their farm, or they may not have just simply a credit rating or a credit history or assets to leverage that. In the PICO sector in Africa, we've seen typically a lot of sales in smallholder or solar lanterns that are really dominating the microsolar space. So hundreds of thousands of these lanterns have been sold every year, and in the last 5 or 6 years, we've also seen the sale of solar home systems, which are more kind of 2- and 3-piece lighting systems that are starting to sell a lot faster. With the emergence of pay-as-you-go companies, we are starting to see these products selling across Africa in a lot more of a rapid pace. We're also seeing them selling at a lot higher watt peak hours, such as 10 watt peak hours, 20 watt peak hours, and more. So some of the challenges that we've seen and the basic trends that we've seen is that a lot of these companies are vertical pay-as-you-go companies, and they are growing rapidly. They have great products, they have great financing, and they have great after-sales support with a lot of strong distribution models operating behind them. They've been able to grow with thousands of homes electrified, particularly in countries such as Tanzania and Kenya, and now looking at Uganda. In our sector right now, there's a lot of other manufacturers that provide Pico Solar. A lot of them are moving towards pay-as-you-go technology to make sure that they remain relevant, as well as to increase their sales of larger home systems. In operating a pay-as-you-go model, there's a number of challenges that smaller distributors or more local distributors in each market have to overcome, and they include capital for products, as well as having a really robust distribution system with after-sales support. When we look at a smaller local company that is starting to manage or looking to grow their current solar company into a pay-as-you-go solar company, we do have to realize that the solar systems that they want to sell are generally anywhere from $100 to $200, and at this price point, this product is generally going to be paid off between 1 to 2 years and requires quite a level of financing and credit, not only from the first stage of purchasing from a manufacturer, but also offering credit to the end consumer. So if we look at the 3 levels of financing that you need in a solar value chain for the pay-as-you-go, a small pay-as-you-go company, there's 3 different areas that there needs to be a focus on. First is financing for inventory, so purchasing direct from the manufacturer. That generally requires, if you're looking at a container load, you're looking at about $150,000 for about 1,000 pieces of solar. So that's quite a bit of money up front that a small distributor needs to purchase. They then need to have the working capital and the ability to offer credit to the end consumers. With pay-as-you-go technology, this is a lot easier to manage. They don't have to develop these systems themselves. They're already in place with the technology. The third thing they have to look at is really the accounts receivables and how do they manage that. We do see a lot of the larger companies such as MCOPA and BBox and Movisol, they are setting up the SPVs. But if you're a small distributor located in, say, Zambia or Benin, do you have the skill set to do this? Do you have the outside support to do this? A lot of them don't, and this is one of the larger challenges of financing their projects, is being able to actually get that capital or get the support for their accounts receivables. And some of the areas where we're seeing a lot of need for financing and support is financing distributors that have maybe been around in the market for 2, 3, or 5 years, financing pilots as small as 200 to 500 pieces so that they can try the pay-as-you-go technology and get a grasp on how it works and how it operates. Even at 200 to 500 pieces, that's still around $75,000 just for the product, not including the credit that is needed to be offered for 1 to 2 years for those products. So it really needs to be financing organizations and investors that have a bit of an appetite for risk to try out on these smaller companies, as well as a look at, is there the possibility for financing in local currencies, simply because of the risks in some countries. If you're lending in USD, you have to look at the currency risks of if that if that currency, local currency, takes a dive and then they have to repay back. Some of the other needs that are really important is just having data reporting tools for business management, decision makings, as well as for investor reporting. One of the interesting things about pay-as-you-go technology is it really is allowing for a level of financial inclusion. So with some of our partners, particularly with solar water pumps, we're really seeing how they are enabling farmers to really finance around their input cycle as well as their harvest cycle, so paying a little bit less during inputs time and paying a lot more when they actually have the harvest in. So payments can be really customized to meet the needs of communities and households, as well as there are all sorts of different models out there that pay-as-you-go companies are trying, from rent-to-own models, utility models, or simply pay-as-you-go, where they can purchase energy hourly, daily, weekly, or monthly. Great. I am cognizant of time, so I just wanted to I wanted to close up there just because I know we have about 2 minutes left, so I'm sure Evelyn wants to open it up for questions.
Yeah, absolutely. Thanks, Eliza, and thanks to everyone for your extensive and interesting contributions. Indeed, let's start with the Q&A. There are already quite some questions coming in, but everyone, you can keep posting your questions throughout the Q&A. I'm just gonna start with Itamar again. Itamar, getting back to the ITCOL program in Bangladesh, what has been the major cost benefit for the industry as a whole? So have solar home systems unit prices gone down, and if so, by how much?
Yeah, that's a good question. Essentially what happened is that the program got kicked off with access to very cheap lending that these individual distributors could then tap into, and that's what drove the initial success. But again, as the reasons why sales have gone down are many. So some list actually improvements to the grid, so broader grid access and actually a reduction in the addressable market. But the other one is really that essentially the costs, the consumer costs by I think there are 57 sort of licensed distributors under ITCOL have stayed relatively flat, whereas the technology costs have come down, of course, quite significantly over that period, and as a result, other alternatives could start to sell primarily probably on a cash basis, but at a lower absolute cost, and that has as well eaten into their market. So there is probably a bit of an element of access to quite cheap financing and the market that was relatively protected in the beginning and uncompetitive, that has sort of led some of the players not to be as innovative as maybe others of the ones we're seeing in Africa now.
All right, thanks, Itamar. And also, do you see a replica of ITCOL happening in Africa?
I wouldn't call it a replica. I think we're seeing some of the, as I mentioned, some of the pay-as-you-go providers starting to talk a lot more in terms of projects rather than being a retail business, but going to financiers and say, okay, why don't you finance 50,000 consumers, which we'll get, and then we'll do that, and that makes it look a lot more like a PV project that just happens to be distributed and with a slightly different sort of revenue stream or payment stream over time. I don't think it's going to be replicated as is ITCOL exactly, but you may find sort of a few individual pieces of the puzzle in the sense that you may get sort of government guarantees or backstops provided into some of these SPVs that then help the pay-as-you-go companies to roll out programs or to roll them out faster.
All right, clear. Thanks. Laura, there's a question that's a bit more in-depth on the sales report. It says, are the 70% sales that are in East Africa, are they Pico solar household systems? And if so, which ones mainly?
Okay, so that includes all of the product categories that our members and the IFC associates are reporting back on. So it ranges from the very small entry-level solar lanterns to systems over 100 watt peak, but they are all household level, either solar home systems or solar lanterns. So we don't have any reporting on the mini grid side.
Okay, and most of these systems are microsystems being sold to individual customers, right?
Yeah, that's correct. So individual customers either through the pay-as-you-go mechanism or on a credit basis or as a pure cash sale, but all to individual households. Although there may, in the largest categories, there could be some community centers or such, but mainly the reporting that we have here is for households.
All right. Sam, this one's for you. So all the pay-go offerings are actually providing energy as a service. I think it's more like it's more a question for your opinion. Isn't it wrong to assume to sell per kilowatt hour?
It's a great question. It gets at the heart of a lot of these things. We don't think it's wrong or right to sell either as a kilowatt hour or as a service. It could be that the world is moving in a direction where all energy will be sold as a service, and we'll have Internet of Things with embedded technology in all of our appliances, and that's how we'll think about power. Because it is true that at the lower levels of consumption, thinking about energy as a commodity really breaks down. Under half a kilowatt hour per day of consumption, people will spend $5 per kilowatt hour, which is hundreds of times more than what someone who's using 5 kilowatt hours a day will spend. And so that's a really important lesson that the solar home system, particularly the pay-as-you-go solar home system market, has taught us. So we are very open. We don't have a bias against selling as a service versus selling kilowatt hours. I think the important thing is to try to sell people energy for its intrinsic value in order to demonstrate that that grid extensions, microgrids, and solar home systems can all be economically viable.
Yeah, and when looking at your at the future vision that you painted, why isn't it completely renewable? Why would you keep depending on expensive or dirty fossil fuels?
I guess it depends where you put some technologies like nuclear maybe. It's going to be very difficult to have a future state that is only intermittent renewable supply unless battery storage at the utility scale gets extremely cheap. I think it's hard to find, even the most optimistic of solar and wind pioneers have to be pragmatic about the fact that some need for dispatchable on-demand baseload is important on grids. So I think it'd be great if we had a future where storage was so cheap where we could have 100% intermittent generation grids. It doesn't sound like the experts think that is particularly realistic.
All right, fair enough. And then I have one question that might be interesting to have all of your, or the ones that have some input on this. How is the PV manufacturing market in Africa? Are there economies or countries within Africa that have local content policies or financing opportunities or high renewable energy plants that encourage the sale and export of PV panels manufactured there? Is there anyone?
Sorry,
Yeah.
I mean, so Kenya has a nascent manufacturing operation in a company called Ubink, which is a joint venture between a European and a local Kenyan company. It's very challenging. It's very challenging for anyone anywhere to compete in the PV manufacturing sector. The Chinese Development Bank has subsidized the Asian companies for the last 5 years to put everyone out of business, and they've succeeded in doing that pretty effectively, and they now control 90% of the production. So it's very challenging to be competitive.
All right, and it's only in Kenya actually, or did? Sorry, Itamar, go ahead.
No, I think the question ties in a bit as well with the previous question around energy as a service. In my view, some of this is starting to develop actually not as an energy business, but really a product plus a consumer financing business. This really is what somebody like M-KOPA is doing now, where you buy the product and it's almost a product that comes with its own power source, with its own solar panel, because that's what's needed to make it work. So you buy the appliance with its own power source as a bundle together with the financing. And I'm saying all of this because that essentially means we're some of these appliances on the low end up to sort of a solar home system look a lot more like consumer electronics than the power system. And that is an area where the economies of scale in certain parts like Shenzhen are just very, very competitive. So it's really hard, and it's nascent to inexistent in terms of doing manufacturing or even assembly in places in Africa.
All right. Actually, in view of time, I feel we should kind of like round off this Q&A. As of course, all of these, I think I should mention this, all of these speakers or organizations will be presenting at the conference. So in Nairobi, so be sure to join in there and meet them. And now, as promised, I would like to give the floor back to Laura so she can inform you a bit more about the off-grid track and what side events they are organizing that could be interesting for you.
Yes, thank you, Evelyn. So the off-grid sector as a whole last year in 2015 attracted about $276 million in investment, and we're keen to increase that figure for this year, and that's also one of the reasons why we're so heavily involved in the upcoming conference to facilitate interactions between industry and between investors. So we have a range of things happening. First, in the conference itself, in addition to the plenary discussions where we have off-grid representatives, and while I agree with Sam that the on-grid, off-grid dichotomy is not necessarily the most helpful, it is how we're still continuing to differentiate our members. So we have the plenary sessions where we're involved. There's the networking dinner where, of course, all of the off-grid participants will be present. And then we have 4 dedicated panel discussions looking at off-grid investment issues. So we're going to be looking at how do we move towards more mainstream capital for this sector, also how do we build more companies across the continent beyond East Africa. We are going to be looking in depth at the pay-as-you-go DESCO sector and how to finance that, and we'll be looking at the working capital issue. And I want to point out again what Evelyn also mentioned, we have off-grid is also part of the business and finance matchmaking sessions on the Wednesday. Then in addition, we have a set of side events. So if we go to the next slide, Evelyn, thanks. So we have a GOGLA, RECP, and Responsibility hosted Off-Grid Solar Investment Academy, which is open to conference participants, and it's on the Thursday in the Radisson Blu as well. If you want to register, you can click on this link. You can also go through the GOGLA website or the Unlocking Solar Capital website and register through there. And then we also have another side event hosted together with GSMA, looking at how mobile money and mobile operators can work for pay-as-you-go companies. So if you are a pay-as-you-go company, whether more established or more nascent, please join GSMA for that discussion. And again, please be in touch with us if you have any questions on the off-grid track or generally about GOGLA's work in this sector. Thanks.
All right, everyone. Thank you very much for your attention. Really hope to see every one of you in Nairobi. And yeah, thank you for your attention.